Bitcoin's journey: how 14 years of evolution shaped the $1 trillion cryptocurrency market. Introduction. Bitcoin, the pioneering cryptocurrency, has undergone a remarkable evolution since its inception in 2009. Initially conceived as a decentralized digital currency to operate without intermediaries, Bitcoin has transformed into a significant player in the global financial landscape, now boasting a market capitalization exceeding $1 trillion. This report explores the pivotal milestones in Bitcoin's journey, examining how each event has contributed to its development and the broader cryptocurrency market. Key milestones and timeline. 1. 2008 White Paper release. The journey of Bitcoin began with the publication of its white paper titled Bitcoin, a peer-to-peer electronic cash system, by the pseudonymous creator Satoshi Nakamoto. This document laid the foundation for a decentralized currency that would operate on a public ledger known as the blockchain, eliminating the need for central authorities. 2. 2009 Genesis block. In January 2009, Nakamoto mined the first block of the Bitcoin blockchain known as the Genesis block. This event marked the official launch of Bitcoin, introducing the world to a new form of digital currency. 3. 2010 First transaction. Bitcoin's first real-world transaction occurred in May 2010 when programmer Laszlo Hanyecz famously paid 10,000 BTC for 2 pizzas. This transaction demonstrated Bitcoin's potential as a medium of exchange and garnered significant media attention. 4. 2011 Emergence of alternative cryptocurrencies. The success of Bitcoin inspired the creation of alternative cryptocurrencies, or altcoins, such as Litecoin and Namecoin. This period marked the beginning of a burgeoning cryptocurrency ecosystem, showcasing the growing interest in blockchain technology and digital currencies. 5. 2013 Bitcoin's price surge. In late 2013, Bitcoin's price surged to $1,000 for the first time, attracting widespread media coverage and a new influx of investors. This milestone solidified Bitcoin's status as a legitimate digital asset and sparked interest from institutional investors. 6. 2014 Mt. Gox hack. The collapse of the Mt. Gox exchange in 2014, which lost approximately 850,000 BTC due to a security breach, highlighted vulnerabilities within the cryptocurrency ecosystem. This incident prompted increased regulatory scrutiny and underscored the importance of security measures in the industry. 7. 2017 Institutional interest. Bitcoin gained significant traction in 2017 as major financial institutions began to invest in the cryptocurrency. The launch of Bitcoin futures by CBOE and CME Group marked Bitcoin's entry into mainstream finance, further legitimizing it as an asset class. 8. 2020 COVID-19 pandemic. The COVID-19 pandemic led to unprecedented economic uncertainty, driving investors to seek alternative assets. Bitcoin emerged as a hedge against inflation, with increased institutional adoption and a rise in decentralized finance DeFi platforms, further enhancing its appeal. 9. 2021 all-time high. In April 2021, Bitcoin reached an all-time high of nearly $65,000, fueled by mass adoption and significant investments from companies like Tesla and MicroStrategy. This surge reflected growing acceptance of Bitcoin as a store of value akin to gold. 10. 2021 environmental concerns. As Bitcoin mining became more prominent, concerns arose regarding its environmental impact due to high energy consumption. This led to discussions around the sustainability of Bitcoin mining practices and prompted some miners to explore renewable energy sources. 11. 2022 market correction. Following its peak in 2021, Bitcoin experienced a significant market correction, reflecting the inherent volatility of the cryptocurrency market. Many factors contributed to this decline, including regulatory uncertainties and macroeconomic shifts. 12. 2023 regulatory developments. As of 2023, ongoing discussions about cryptocurrency regulation, particularly in the US, have been pivotal in shaping the market's future. Governments worldwide are exploring frameworks to regulate cryptocurrencies, balancing innovation with consumer protection. Common themes and differences. The evolution of Bitcoin is characterized by several common themes, including its transformative impact on finance, the emergence of alternative cryptocurrencies, and the ongoing regulatory challenges it faces. Both sources emphasize the milestones that have solidified Bitcoin's status as a significant asset class and its role in shaping the broader cryptocurrency market. However, while both sources provide a similar timeline of events, their focus may differ. One source might delve deeper into technological innovations such as the Lightning Network for faster transactions, while another could emphasize the socio-economic implications of Bitcoin's rise, including its potential to foster financial inclusion. Conclusion. Over the past 14 years, Bitcoin has not only evolved technologically but has also shifted perceptions about money and finance. From a niche digital currency to a viable investment option and a potential alternative to traditional financial systems, Bitcoin's journey has been nothing short of extraordinary. As the cryptocurrency continues to evolve, it remains a topic of intrigue, with ongoing developments poised to further influence the global financial landscape. The future of Bitcoin and the cryptocurrency market as a whole will depend on how they adapt to regulatory scrutiny, technological advancements, and changing investor sentiments. The evolution of Bitcoin over the past 14 years presents several counterintuitive insights that challenge conventional understanding of cryptocurrencies and their impact on finance. Here are some key points. 1. Market volatility versus institutional adoption. While one might expect that increased institutional investment would stabilize Bitcoin's price, the opposite often occurs. The influx of institutional money has historically coincided with extreme price volatility, as seen during the 2021 surge and subsequent corrections. This suggests that rather than providing stability, institutional interest can amplify speculative behavior in the market. 2. Environmental impact. Bitcoin mining is often criticized for its environmental consequences. However, this criticism has unexpectedly fueled innovation in renewable energy sources. Many mining operations are now exploring sustainable practices and utilizing excess energy from renewable sources that would otherwise go to waste. The perception of Bitcoin as an environmentally harmful asset is leading to a transformation in how energy is sourced and utilized in the mining process. 3. Decentralization versus regulation. Bitcoin was created to be a decentralized currency free from government control. However, as it has gained popularity, regulatory scrutiny has increased. Paradoxically, this regulatory attention may legitimize Bitcoin and enhance its acceptance as a mainstream financial asset, instead of stifling its growth. Regulations could ultimately lead to greater stability and broader adoption. For public perception of value, the initial perception of Bitcoin as a niche digital currency has evolved into a view of it as a digital gold. This shift in perception is counterintuitive because it suggests that an asset designed for decentralization and anonymity is now being valued as a traditional store of wealth. The transition from a medium of exchange to a perceived safe haven asset illustrates changing societal views on currency and value. 5. Technological advancements versus user experience. The introduction of technological improvements like the Lightning Network aim to enhance transaction speed and reduce costs. However, the complexity of these technologies can alienate average users. This creates a paradox where advancements meant to improve Bitcoin's usability may simultaneously hinder widespread adoption due to their technical nature. 6. Security breaches as growth catalysts. Events like the Mt. Gox hack, initially viewed as devastating setbacks, have led to stronger security protocols and increased awareness about the importance of safeguarding assets. Rather than causing a decline in trust, such incidents have prompted innovations in security measures across the cryptocurrency industry, thereby fostering a more resilient ecosystem. 7. Speculation versus utility. Many view Bitcoin primarily as a speculative investment, yet it has also been adopted for practical use cases such as remittances and financial inclusion in unbanked regions. The counterintuitive aspect here is that Bitcoin can serve both as a speculative asset and a means of addressing real economic challenges, showcasing its dual nature. 8. The role of media. Media coverage can often exaggerate the volatility and risks associated with Bitcoin, contributing to a fear of missing out FOMO that drives speculation. Conversely, negative press resulting from market downturns can deter potential investors. This duality highlights how media narratives can shape public perception and behavior towards Bitcoin, influencing market dynamics in unpredictable ways. 9. Global nature versus local regulations. Bitcoin's global reach is often seen as a challenge for local regulations. However, local regulations can sometimes enhance Bitcoin's legitimacy, allowing it to integrate more seamlessly into existing financial systems. This contradiction illustrates how local actions can influence a globally decentralized asset, creating a unique interplay between regulation and innovation. 10. Cyclical nature of adoption. The cryptocurrency market experiences cycles of exuberance and despair, which can lead to the misconception that Bitcoin's relevance is fleeting. However, each cycle typically results in increased adoption and infrastructure development, indicating that the market is maturing rather than fading away. This cyclical pattern challenges the narrative that Bitcoin's rise is merely a bubble. These counterintuitive insights highlight the complexities of Bitcoin's evolution and its multifaceted impact on the financial landscape. Rather than following a linear path, Bitcoin's journey reflects a dynamic interplay of technological innovation, market behavior, and societal perceptions that continue to shape its future. In reviewing the report on Bitcoin's journey over the past 14 years, several important aspects may be overlooked by many readers, yet they hold significant implications for understanding the cryptocurrency's evolution and future trajectory. Below are some of these critical elements, along with an explanation of their importance. 1. The role of the white paper. The release of the Bitcoin white paper in 2008 is often mentioned as a foundational moment, but many may not fully appreciate its significance. Satoshi Nakamoto's white paper was not just a technical document, it was a philosophical manifesto that challenged established financial systems. It introduced concepts of decentralization, trustless transactions, and censorship resistance. Significance. This foundational ideology has driven the development of Bitcoin and other cryptocurrencies, influencing how people perceive money, trust, and authority. Understanding this context helps clarify why Bitcoin has garnered both fervent support and staunch opposition. 2. The first real-world transaction. The purchase of 2 pizzas for 10,000 BTC by Laszlo Hanyecz in 2010 is often viewed as a humorous anecdote. However, this transaction marked the first time Bitcoin was used as a medium of exchange in the physical world, which is a critical validation of its utility. Significance. This moment symbolizes the potential for cryptocurrencies to function as actual currencies rather than mere speculative assets. It also highlights the challenges Bitcoin faces in becoming a widely accepted medium of exchange, especially as its value has skyrocketed, making small transactions less practical. 3. The Mt. Gox incident. The Mt. Gox hack in 2014, where 850,000 BTC were stolen, is frequently cited as a cautionary tale about security in the cryptocurrency space. However, it also catalyzed a critical shift towards regulatory scrutiny and security improvements across the industry. Significance. This incident underscored the vulnerabilities within the cryptocurrency ecosystem and the need for better practices. It initiated a dialogue about the responsibility of exchanges and the importance of user security, which continues to shape regulatory discussions today. 4. Institutional interest and financialization. The entrance of institutional investors into the Bitcoin market, particularly around 2017 and 2020, is often mentioned, but the implications of this trend are sometimes underestimated. the launch of Bitcoin futures and significant investments from corporations like Tesla and MicroStrategy indicated a shift from a retail-driven market to one increasingly influenced by institutional players. Significance: this transformation has led to greater legitimacy for Bitcoin as an asset class but also raises concerns about market manipulation and volatility. Understanding this shift is vital for comprehending how Bitcoin fits into the larger financial system and its potential future. 5. Environmental concerns. The discussions around the environmental impact of Bitcoin mining, especially highlighted in 2021, are often overshadowed by price movements and adoption statistics. The energy consumption associated with Bitcoin mining has brought forth ethical considerations regarding sustainability. Significance: the scrutiny of Bitcoin's environmental footprint poses a significant challenge for its long-term viability. It has prompted discussions about the future of mining practices and the necessity for innovations that could lead to more sustainable operations. This aspect is crucial for attracting environmentally conscious investors and users. 6. Regulatory developments. While regulatory challenges are frequently mentioned, the nuances of ongoing discussions could be overlooked. The regulatory landscape is evolving, with different countries adopting various stances on cryptocurrency. This can significantly affect Bitcoin's usability, acceptance, and value. Significance: understanding the regulatory environment is essential for predicting Bitcoin's future trajectory. Countries that embrace regulations may foster innovation, while those that impose strict bans could stifle growth. The regulatory framework will play a pivotal role in determining how Bitcoin integrates into the global financial system. 7. The psychological aspect of investment. Bitcoin's journey has been marked by extreme volatility, and while price surges and corrections are often noted, the psychological impact on investors is rarely explored in depth. The fear of missing out, FOMO, during price increases and the panic during downturns can lead to irrational decision-making. Significance: this psychological aspect is crucial for understanding market behavior and the cycles of investment interest. Recognizing the emotional drivers behind the trading of Bitcoin can help investors make more informed decisions and mitigate risks associated with market volatility. 8. The Lightning Network and technological innovations. The implementation of the Lightning Network, aimed at facilitating faster transactions and reducing fees, is often mentioned but not fully explored. This innovation represents a significant step towards making Bitcoin more viable for everyday transactions. Significance: the development of scaling solutions like the Lightning Network is essential for Bitcoin's future usability as a currency. If Bitcoin is to compete with traditional payment systems, improvements in transaction speed and cost are paramount. This technological evolution could determine Bitcoin's long-term position in the financial ecosystem. Conclusion: while the report covers key milestones in Bitcoin's journey, the overlooked aspects discussed above present a deeper understanding of the cryptocurrency's evolution, challenges, and future potential. Each of these elements contributes to the broader narrative of Bitcoin as a transformative force in finance and highlights the complexities that will shape its trajectory in the coming years. As Bitcoin continues to evolve, these factors will be critical in determining its role in the global economy and its acceptance as a legitimate form of currency. 1. Decentralization and financial sovereignty. Bitcoin's primary innovation lies in its decentralized nature, which empowers individuals to have control over their own finances without the need for intermediaries like banks. This aspect has profound implications for financial sovereignty, as it allows users to transact freely and securely across borders, challenging traditional financial systems and promoting financial inclusion. 2. Market volatility and institutional adoption. Bitcoin's price trajectory has been marked by significant volatility, highlighted by its dramatic price surges and corrections. The entry of institutional investors, especially during notable events such as the launch of Bitcoin futures in 2017 and the rise of major corporations investing in Bitcoin in 2021, has not only legitimized Bitcoin as an asset class but has also influenced its price dynamics. This institutional interest reflects a growing acceptance of cryptocurrencies in mainstream finance and raises questions about the sustainability of such investments. 3. Regulatory landscape and security challenges. The evolution of Bitcoin has been closely tied to the regulatory landscape and the security challenges it faces. High-profile incidents such as the Mt. Gox hack have exposed vulnerabilities in cryptocurrency exchanges and have led to increased scrutiny from regulators worldwide. Ongoing discussions about regulatory frameworks are crucial in shaping the future of Bitcoin and the broader cryptocurrency market, as they can affect investor confidence, market stability, and innovation within the space. 4. Environmental impact and sustainable practices. The environmental concerns associated with Bitcoin mining have gained significant attention, particularly as the energy consumption of mining operations has been scrutinized. This has sparked a broader conversation about sustainability in the cryptocurrency space, leading to calls for more environmentally friendly practices and innovations such as the development of energy-efficient mining technologies and the shift towards renewable energy sources. These discussions are imperative for Bitcoin's long-term viability as a digital asset in a world increasingly focused on sustainability. 1. The South Sea Bubble 1711 to 1720. This was one of the first major financial bubbles in history, characterized by speculative investment in the South Sea Company, which was granted a monopoly on trade with South America. The company's stock price soared, driven by hype and speculation, leading to a massive crash in 1720 that wiped out many investors. The South Sea Bubble serves as a cautionary tale about the dangers of speculative bubbles. Much like the rapid rise and fall of Bitcoin and other cryptocurrencies. 2. The Tulip Mania 1634 to 1637. Often cited as the first recorded speculative bubble, tulip mania occurred in the Netherlands when the prices of tulip bulbs skyrocketed to absurd levels. At the height of the mania, a single bulb could cost as much as a house. The bubble burst in 1637, leading to a dramatic decline in prices and financial ruin for many investors. This historical case parallels the volatility observed in the cryptocurrency market, including Bitcoin's price fluctuations. 3. The dot-com bubble 1997 to 2001. The dot-com bubble was a period of excessive speculation in internet-based companies, leading to soaring stock prices. Many startups were able to go public and see their stock prices soar despite lacking solid business models. The bubble burst in 2000, resulting in significant losses for investors and the collapse of many companies. Similar to Bitcoin's rise as a digital asset, the dot-com boom and subsequent crash illustrate the potential for rapid growth and just as rapid decline in emerging technologies. Future outlook, predictions for Bitcoin and the cryptocurrency market. As Bitcoin approaches its 15th anniversary in 2024, its trajectory remains a focal point for investors, technologists, and regulators alike. The evolution over the past 14 years has laid a strong foundation, but looking forward, several key predictions can be made about Bitcoin's future and the broader cryptocurrency landscape. 1. Mainstream adoption and integration. Bitcoin is expected to continue its journey towards mainstream adoption. With increasing awareness and understanding of cryptocurrency, more businesses and financial institutions are likely to integrate Bitcoin into their operations. Major retailers and online platforms will increasingly accept Bitcoin as a method of payment, contributing to its legitimacy as a medium of exchange. This trend is fueled by a younger demographic that is more open to digital currencies and technology. 2. Regulatory clarity and frameworks. The regulatory environment for cryptocurrencies is anticipated to evolve significantly. As governments around the world recognize the importance of cryptocurrencies, clearer regulations will emerge. This will likely address issues such as taxation, anti-money laundering (AML), and consumer protection. A stable regulatory framework will not only help protect investors but may also encourage institutional investment, leading to greater market stability. 3. Technological innovations. Technological advancements are expected to play a crucial role in Bitcoin's future. Innovations such as the Lightning Network, which enables faster and cheaper transactions, will enhance Bitcoin's usability as a currency. Additionally, improvements in security protocols and energy-efficient mining methods will address environmental concerns associated with Bitcoin mining, potentially making it a more sustainable option in the long run. 4. Institutional investment growth. Institutional investment in Bitcoin is projected to expand. As traditional asset managers and hedge funds recognize Bitcoin as a legitimate asset class, the influx of institutional capital is likely to drive up demand and price stability. Products like Bitcoin exchange-traded funds (ETFs) could further facilitate institutional participation, allowing more investors to gain exposure to Bitcoin without directly holding it. 5. Digital currency competition. Bitcoin will face increasing competition from other cryptocurrencies that aim to address its limitations, such as transaction speed and energy consumption. Ethereum, with its smart contract capabilities and emerging Layer 1 and Layer 2 solutions, may attract developers and users seeking alternative platforms. However, Bitcoin's first-mover advantage and established network effects will likely maintain its position as the leading cryptocurrency. 6. Global economic influences. Macroeconomic factors such as inflation rates, interest rates, and geopolitical tensions will continue to influence Bitcoin's price and adoption. In times of economic uncertainty, Bitcoin may be increasingly viewed as a digital gold, acting as a hedge against inflation and currency devaluation. Its decentralized nature offers an alternative for individuals in countries with unstable currencies or financial systems. 7. Focus on financial inclusion. Bitcoin has the potential to enhance financial inclusion, especially in underbanked regions of the world. As mobile technology continues to penetrate developing markets, more individuals will gain access to Bitcoin and other cryptocurrencies. This can empower people with financial tools that were previously inaccessible, promoting economic participation and entrepreneurship. 8. Environmental sustainability initiatives. Given the growing concerns surrounding Bitcoin's environmental impact, the industry is likely to see a push towards more sustainable practices. This may include the adoption of renewable energy sources for mining operations and developments in carbon offset programs. The narrative surrounding Bitcoin's sustainability will be crucial in maintaining its social license to operate and attracting environmentally conscious investors. 9. Decentralized finance, DeFi, and Bitcoin's role. The DeFi movement, which aims to recreate traditional financial systems using blockchain technology, will continue to grow. Bitcoin could play a significant role in this ecosystem, especially with the development of wrapped Bitcoin (WBTC) and other interoperability solutions that allow Bitcoin to be used within DeFi applications. This integration could enhance Bitcoin's utility and attract a new wave of users. 10. Cultural and social impact. As Bitcoin matures, its cultural significance is expected to expand. It will continue to inspire discussions about monetary policy, privacy, and the future of finance. The community-driven ethos of Bitcoin will likely foster new social movements centered around financial sovereignty and digital rights, influencing public perceptions and policy decisions. Conclusion. Bitcoin's journey has been one of remarkable transformation, and its future prospects are equally compelling. While challenges remain, the potential for mainstream adoption, regulatory clarity, technological innovation, and institutional investment creates an optimistic outlook for Bitcoin and the broader cryptocurrency market. As Bitcoin continues to evolve, it will not only shape the financial landscape but also contribute to broader societal changes, making it an exciting space to watch in the coming years.